Alright, yo. So, I'm back. Alright, so, basically what I wanted to do, or like previous week, I haven't uploaded in that's Minecraft. I haven't uploaded in like 2 weeks or something. I was actually on holiday or vacation. I was going to Madeira with my girlfriend for 12 days. Yeah, 2 weeks ago. And I haven't made a video. Last video, I don't even know. I blew my account. I think that was the video. Yeah, so I blew my account on My Founder Futures. And right now I'm actually on a Top Step account. And it's right here. And I opened a 50k Top Step account and I'm now doing that. Took like 3 trades on holiday. Alright, so I took 3 trades on like a holiday, or when I was on vacation, and I'm actually up pretty good right now with this account. I still need like 1,000, so I need like 2%, a bit more than 2%, and then this account will be passed, and then I will be funded. But we're not there yet, but it's going pretty well. This trade I took, so this was before vacation. This trade I took on vacation, took a small loss there, and then I took another good trade. So I'm up now on the account. Need like 2% and something, but it's going pretty good. That's Minecraft. Doing Minecraft server with my friends. But yeah, so I want to do my analysis of DXY. Basically what's happening right now, and yeah, the indices, of course. My gut bias going into the week. And if you look at DXY here, then I was actually expecting for this rejection block to hold, which was on the weekly, but we didn't. As you can see here, we got this displacement through the upside from there, and then I was expecting, yeah, we want to go for these equal highs, but then we tapped this rejection block here. Then we went lower, but from here, when we took these equal lows, I actually wanted to see these lows not get swept, I think it was, because then we had another SMT, yeah, right here. So I actually wanted to see this right here, because this reacted off that rejection block here. So right here, it's all pretty messy actually. And then I want to see this volume imbalance somewhere there, but I want to see this reaction here from here, and then I want to see these highs, these equal highs here, and then these equal highs here as well. So on the 4-hour time frame, we had these equal highs here, and then we inversed this leg here and then went higher. But as you can see, we just went higher here and just straight dumped here through all these lows, taking all these lows, and then this rejection block didn't get held here, so we took these lows now. But it was like that scenario where we had that SMT on DXY with the trading food charts we still have, but it was like right here where we had, it was like this rejection block that we held there. Then we held this rejection block here, right there, and then we went a bit higher, and then we turtle soup this. So this actually would be like a turtle soup, like with these equal lows. We had this low here, and then we stepped into here, and then we had this market structure shift, and then from there we went higher, standard deviation, -1 standard deviation, perfectly with IPTA 40, and then I was also expecting for IPTA 40, and then for us to trade through there, and then reach the equal highs above here as well. So then we have buy side liquidity here, and then buy side liquidity here, buy side liquidity here, buy side liquidity here. So I wanted to actually see us trade through here and then go for these equal highs there, but as you can see, we just straight up just dumped after that. So that doesn't really make sense to me. So I said to myself, if we take out these highs, then I'm moving over to the capital comp charts, because we had this step in this low and the trading view charts didn't. So if you go back to the weekly rejection block here, is that weekly rejection block, and we're still holding it, but I don't really expect it to hold. But still, so we tapped the constant encouragement there, went lower, then we had that SMT with this chart, because we stepped into that low here and we didn't there. So if we still look at this chart as this trading view chart as the original chart, you could say that we still didn't sweep this low, so there's actual liquidity below here, because we have equal lows below here. We took this low, but we have equal lows below here, equal lows below here. And then it doesn't matter that we reacted off this rejection block, because we're actually still bullish. So if you look at the daily here, so then this would be the turtle soup. And then from here, then we take out that low, and then we actually go. So that would mean that this would be the better chart to trade in, but yeah. This already took the low, so that was the reason why I wanted to trade on this here. But yeah, I was only saying if we take out these highs here, then I'll pick this chart. But yeah, now we didn't take out those highs. Now we went lower, so it looks like this will be the original chart. So I'll actually delete this one, and I'll again use the trading view charts. So let's do my analysis from here. So yeah, if we look at this chart here, and this is the original chart, then we still have equal highs above here. So this would also be up to 40, if I can mark it out. Up to 40 there. And I'll put this to the right and top there. So we have up to 40 there, and then we also have these equal highs above here, which is the original consolidation inside of that market maker buy model. If you look at this market maker buy model from the daily perspective, I'll just put it on there. It doesn't really matter. Isn't necessary, but it looks clean. And then this would be an market maker buy model in its own, but it failed. So we'd have now have equal highs above there. So as you can see, we tapped that rejection block there on the weekly. Why the weekly? Well, on the monthly, we have a wick there as well, but on the weekly we have a bigger wick. So I take that one. I take the biggest wick. On the daily we have a wick as well, but still on the weekly it's bigger. There's no wick there, and the precision here is just beautiful. Look at that. That small wick there, but still, I was thinking that this was going to be some resistance, but I still wanted to see us straight through there. But yes, there is original liquidity there, or there is actual liquidity there if we ignore the capital comp chart. So we first need to see these lows get swept, because we have equal lows generated liquidity, and then from there turtle soup that low and then go higher there. But let's also look at the bigger time frame for singular for fake gap. So we have a busy there, busy there. Let's look at the monthly. You have no busy here. So what I do is I look here. So busy there, busy there. So I take from this leg to this leg on the next time frame, swing low to swing high. This is our dealing range. Optimal trade entry. Let's just put it there. There. All right. So this could be. Now we actually have a narrative, and now we have something confirming it. So what we have here is we have actual liquidity below here. So we have actual sell side liquidity below here. And this rejection box is just that small reaction that we left off here. Look at that constant encroachment there. Constant encroachment where we left the week perfectly, closed the week perfectly. Look at that. That's just precision is just right there. But that's constant encroachment. So we have equal lows below there. Let's remove the rejection block. So we have equal lows below here, and then we have equilibrium as well. Let's just make this a bit bigger. Right there. Alright, so what we have is we have equal lows that we're expecting to get turtle souped, because we're still bullish. So then everything that we would have, that we would need for us to be, everything that we need, every manipulation that we need, we just had if we do this, because we take out the liquidity, we come back into a discount, and from there you go actually higher. So that's actually what I'm expecting for this week. I'm not expecting for this to generate liquidity here, generate liquidity here, generate liquidity here, and then go all the way lower. It doesn't make sense for us to go way lower and then leave all this liquidity here. We have no liquidity taken on the buy side of the curve. So where would smart money sell? They have no opportunity to sell their buy orders or to go short. Because we didn't take out any major buy side liquidity. So that's what we still need to do. So smart money is probably going to take it up right here, because we have equal highs above here. Let's even put it out there. Why do we have equal highs above here? Let's look here. Daily, it's a daily chart here, but only 4 hour you can see it more. Look at all these clean highs. There's no step into this and then go lower. We have all this generated buy side liquidity. So that's the reason why I'm actually still really bullish, and that would mean that I'm really bearish on the indices. So here we have equal highs above there, and then when we come back here, I'm not expecting this to get to be resistance. So I have equal highs above here, equal highs above there. This would be a market maker buy model inside of its own. So we have a key level that we step into. We have equilibrium that we step into. And then this would be the original consolidation. Doesn't matter where I take the body, I just drag it where it's clean. Doesn't matter. So we have original consolidation, another original consolidation. So we have 3 original consolidations that we had left. So it would be a market maker buy model inside of a market maker buy model inside of a market maker buy model. So that would just be a perfect, beautiful reversal. And that's actually what I'm expecting for now. So I'm still really bullish, even though because we had all this displacement, doesn't matter, because this is the original chart that we should have been looking at, and we shouldn't have been looking at that capital com chart. So what we need to see is we need to see all this sell side liquidity get swept first before we go higher. So what I want to see is we go lower, generate some structure, step into that right there, and then go higher. Take out these equal highs, trade through these equal highs, because I'm expecting no resistance. And this would be the second stage distribution, low risk buy here, and then second stage distribution from there. First rate distribution, second stage distribution right there. All right, so that's what I'm expecting for DXY. Just looking beautiful actually. So this is all that I have marked out. So nothing else, no nothing. So only optimal trade entry. Don't even need the optimal trade entry, just could put the equilibrium here, but it looks clean. So just I only need the equilibrium there. I'll just put it on right there. So yeah, what I want to see, equal lows, equilibrium, and then go higher. So turtle soup from there. So yeah, that's basically what I want to see. Let's now go to the indices. So we're now again at the indices back at all-time high. So that's actually crazy, but yeah, we are. So as you can see here, there's no singular BISI or anything that we can trade off of. So if we don't have that, then what I do is I go to, or I don't go to, but I'll explain what I do. On insert, I think I have it written down here. So this is for my notebook. When we have a big range, there's no realistic singular, and there's no realistic singular FEG. Then we zoom into a leg of its own. For bias, you then use rejection block, turtle soups, and market maker liquidity. So and this actually should be the higher one. There and there. All right. So for market maker liquidity, so what I look at this is I look at the market as a market maker model. So if you zoom in weekly, do we see a market maker model? No. We zoom in even more. No. So basically what I do is I go to the 4 hour right there. That will give the best vision here. And then I look just at structure, what we have. All right, so we have a low there, we have a low there. So this would be equal lows, but if you look at this here, this low and this low, we already took that low. So what we have is an SMT. What we have, turtle soup slash SMT slash market maker liquidity. So we already took look at what is taken out here. So then we do an SMT here. So we went higher from there. And now you can see this big displacement is actually from CPI. I was still looking at the markets. I can see we have generated buy side liquidity above here. Oh, we actually stepped into it here, but it's just a really small step. But we do actually have that daily SMT. Daily SMT there. Now I see this SMT here, and it fits my bias for me to be bearish. It fits my bias. Like we have a daily SMT. Should I take a short right when market opens and then look to go all the way there? No. Now I look at the economic calendar and I look if we can hold that, or if a news event is going to step into that again and then go lower, because that is what it wants to do. If it's not really that convincing, then I'll just look at news. So Monday, when we have high impact news folders on Monday, I basically look at it like it's something that we just have to catch up from Friday. So we actually need to catch up previous week that we didn't complete. We always have a target, but we didn't complete it on the Friday or the week. So let's look at the charts again. Do we have something that isn't complete? If we look at this here, not really. I don't see anything that isn't complete. But if you look at DXY, then we have all these lows here. Does it look like this is completed and that we took a major key level liquidity point or just a key level. No, it would mean that on Monday probably we would take that key level, that point that we should have taken on Friday but we didn't. So this is probably what we will have on Monday. The Monday will be the what is it? It's the index and Powell will be speaking. So probably that is going to be the volatility to take out these lows, because that is an unfinished business from Friday. So that's how I look at it. So Monday is probably going to step into this, and then on short term we're going to be a bit more bearish. So short term, if you look at the power of 3, then we also we always have a open, we have a low, we have a high, and we have a close. That's the open, low, high, close. Or we have an open, high, low, close. All right, so it's one of these two. So we have an open, low, high, close, or we have an open, high, low, close. This is in a bullish week, this is in a bearish week. All right, so probably it's going to be Monday is going to be the opening of the week, or Sunday is going to be the opening of the week, and then Monday is probably going to be the manipulation. Let's look if we have anything else on Tuesday. Tuesday could be a manipulation as well. So Monday, Tuesday manipulation / Tuesday manipulation / distribution, and then Wednesday we have medium impact news folder. So the AM session is probably going to be distribution, and then the PM session is going to be the accumulation, and then Thursday we have again distribution, and then Friday we have consolidation. So if you look at that, and then with the narrative that I'm expecting, this is for DXY. Let's later do it for the indices. So what I'm expecting is we open on Sunday, or we open on Monday, how you want to look at it. We'd open there. Let's just say Monday. Monday we'll trade lower inside of these equal lows. We will trade lower, and then this will be let's just make it even more convincing. All right, so we open. Monday will go lower. All right, Tuesday will maybe go lower, take out that low, or Tuesday will expand already. So this is Tuesday. All right, now is Wednesday. Wednesday we have no high impact news folders, but we do have medium impact news folders. So the AM session is probably going to be pretty volatile. So the AM session, we're probably going to distribute more in AM session. All right, and then the PM session of Wednesday, we're probably going to accumulate because we have no high impact news folder. So when London closes and New York is still there, but London closes, when New York and London are together, that's the most volatile session. But London will close in the AM session, and if there's no high impact news folders, I have found in my backtesting that the PM session will just suck. So we expect accumulation there. So this will be the accumulation inside of Wednesday PM session, and then Thursday we again have high impact news folders. We have unemployment claims, and from there I'm expecting again a manipulation, small manipulation, step all these lows. From there trade higher, distribution, and again Friday we have no high impact news folders, not even medium impact news folders. But still, if you have medium impact news folder, I don't even trade Friday. But we have no high impact news folder. So what I'm expecting there is I'm expecting accumulation. So from there, Friday will just be accumulation, and it will be close of the week. So if we take this, all right, let's just take this here. What we have is we have a open, we have a low, we have a high, and we have a close. Bang. All right, so this is what I'm expecting for DXY. All right, with the narrative that I just said, that's the open right there. Let's remove that, or let's just keep it on there just to show. And there, I'm not expecting really. Let's just see if this week will be. I don't know about this week here. If we take out all these, but if we take this narrative here, then we have an open. We have a low, print low. Tuesday could go lower, doesn't have to, but it could go lower. Equilibrium, go higher, PM session, accumulate. Again, we will, on Thursday, we will take out these lows because we have high impact news folders. Then go higher. Friday we will accumulate because we have no high impact news folders. And we'll close. So I think around here, let's see what we have here actually. Where could we close? I'm really not expecting anything crazy. Let's see. If you take out this low here, we do have a singular SIBI here. So we'll probably close around that singular CB, and then I do want to see it act as an inversion, but that will be later on if we close the next week above there. But I do want to see us, I think, close around that CB there. So if you take it there, so we'll probably close around that CB on that weekly CB. So that's what I'm expecting for upcoming week. This is how the markets move basically. Maybe I can just find a real quick example of this in like a week or like year, maybe. Maybe I can just find it here. All right, so here, right here. So we start here. This just it's just a distribution of a smart money reversal. So let's say this is the smart money reversal. All right, so this is our original consolidation. We go higher, we trade it higher right here. We accumulate, we take out that low there, and then we go even higher. This is not really a great example, but it's just DXY here. It's not really the most clean price action. We can even zoom in because it happens everywhere. Here. Alright, so right here, even on the 5 minutes, just like a random time frame. So original consolidation, accumulation 1, accumulation 2, accumulation 3, whatever you want, alright? So we're here, step into that, breaker, smart money reversal, low risk buy there, or low risk buy would be even here, or no manipulation on that candle, but we trade lower, so we accumulate, we distribute, we accumulate. So this will be the Wednesday PM session, and then Thursday, bang, we step into that, take out all these lows right there, then we go higher. Thursday, distribution right there, and then Friday, accumulation, close. All right, so it's just maybe I shouldn't have said all that, maybe it's just too much, but just beautiful to see, and that's really what I'm expecting for that. So if we take that information that we just had on DXY, if we take that information to the indices, then what I want to see is, all right, so let's actually make it there. So there. All right, so this is what I want to see. All right, so short term, I want to see us go lower. Long term, I want to see us go higher. And then I'm speaking of this week. All right, so short term lower, long term higher this week. All right, so short term, the exact opposite of DXY. So short term, I again want to see us take out these highs, make all-time highs. People are thinking, oh my god, we're just bumping right now, we should go to the moon, we should go to 6k, or no, it's just too much, but we should go to 5500, or we already there, 5750 or 5750. We should go to 21k there. Beautiful, 21k, we should go there. So we could go there, but then from there we would just dump. So what I'm thinking is we want to take out the buy side liquidity above here. So short term, I want to see us go higher, and then long term, I want to see us go lower. So let's see, let's look at this as market maker liquidity. This is where the move started, so we stepped into that. So they took all those lows there. So we have no equal lows, no major sell side liquidity. So it's in the disadvantage of us already. But that isn't the only liquidity that we have. If you zoom in, then we have like it's just a wick, which is CPI. All right, but still, we have liquidity below that low. It always news wicks that can be seen as external liquidity. 830 news wicks, and then from there, let's just look even more. So we already took out that low there. That would be this low here on ES. Let's look lower then. Then we also have these lows that we actually have an SMT on. So that low hasn't been taken. We don't have equal lows there. We do have an SMT here. So right here. So we do have liquidity below this low then. Because this low hasn't been taken on ES, has been taken on NQ. So the next major sell side liquidity will be here. And it's already looking like it's in the disadvantage of us. We don't even have sell side liquidity below there. Alright, so let's look even lower. Let's look at the daily. Where could we go? So we open. We go higher. We go lower. Where lower could we go? Let's look at a weekly candle. What's realistic? That's a weekly candle. We have no CPI. We did have it there. So also here, this will fit our narrative. So we have a accumulation candle. we have a manipulation candle with a distribution candle. So this will be previous week liquidity that we have, and then we have liquidity below this low, even though that low has been taken already. So you have sell side liquidity below there. And this is just the next liquidity point that we have, and we have nothing really there. And then the next major liquidity point, oh yeah, right here. Yeah, that's beautiful. All right, so here, next major liquidity point there, where is actually liquidity below here, because we have generate lows there. People think of this as resistance, so we actually have equal lows below there, and then equal lows below there as well. So right there. So that's what we have here. So what I want to see for the indices, I want to see us open. I want to see us print a high. I want to see us print a low, and then from there just a close. So around there, I have no idea where we will close actually. I have no idea actually where we want to close, but that's just something that the market wants to tell us. But this is just the narrative that we have, and that's just everything. So mixed with DXY, exact opposite, and that's right what I want to see. So yeah, this is basically the buys. That's it. So yeah, that's it. So I will be trading the funded account there. So top step. So I will be trading the funded account, and I will be probably risking. I'm risking like 0.75% on this account because I really don't want to be in it too long, and I'm already in it too long. But I'm probably gonna risk 0.75% again. On vacation, I risk like 0.25%, like 5 micro contracts, because that's the max I could do, and then one mini contract is just too much. So that's why I risked 5 micros, but I will be risking like 1 mini or like 5 micros with a big stop, or I don't know, but it's going pretty well. And yeah, we'll be trading on this account here, and yeah, that's everything I have. So yeah, I'll let you guys know for this upcoming week, and yeah, that's it. So yeah, bye.